This week, Goldman Sachs chief CEO David Solomon struck a downbeat note about the economic outlook, saying smaller bonuses and even potential job cuts should come as no surprise in 2023. Another downbeat statement came from Bank of America CEO Brian Moynihan, who said that while consumers are still spending more now than a year ago, the rate of growth in spending is starting to slow, and deposits balances are starting to come down. Moynihan also said that Bank of America will see 3 quarters of negative growth in 2023. In other words, a recession. Lastly, JPMorgan CEO Jamie Dimon told CNBC that we could have a mild to hard recession next year. So there you have it. More Wall Street statements on the most predicted recession ever. Well, what do the charts say? Two charts today, beginning here with the 2-year weekly chart on the volatility index or the fear gauge. And as you can see in the upper left, the symbol is $VIX using stockcharts.com. We keep coming back to this because we want to get good at this chart. We want to be able to read it because it's going to tell us or help give us an idea of what's going to be happening here in the future. Now we see this dish coming on down here, bottoming and basing here in 2021 and then moving on up. Now this move here came a little lower than what we were expecting. We were expecting a measure of somewhere around 20. Well, that's what we got, but it came a little bit lower down into the 19. I don't think that's a real big deal. It's not showing that it's breaking down, at least in my opinion. So I think it's going to bottom base and head back on up. At least if you look here in the lower portion of the chart, this is the MACD. You see the fast line in black coming on down here, and you can see the histogram. It looks like it's bottoming and basing. And if it's going to do anything like it did back here, it's bottoming, basing, and perhaps going to head on up. I think that's the probability. And what that means here in the middle of the chart is that this is going to head back on up. And you know, when the VIX heads up, the stock market heads down. So let's now go take a look at the charts. Sticking with the 2-year weekly theme, we're looking here at the spiders, the SPY, and as you can see here, let's draw that channel with the bottom channel line moving through more or less like that, and then the top channel line moving through more or less like that. We came up to the top channel line and it looks like we're getting reflected back down. I think that's what the probability is. So this is no time to be moving into any new stocks. Just wait and see. Let's see if this moves on down. The chart moves on down here toward this lower channel line. Maybe not all the way, but perhaps it can get down to this area here consistent with that. Now, if it does, we may have a head and shoulders there with one shoulder, here with a head, and perhaps another shoulder here. That would be a good sign because that bottoming and basing would indicate perhaps the market is ready to head on up after coming down here if it reflects back on up. But we have to get through this trend line. We have to get above that level and of course this level and this level on our way up. That's a tough task at this time given the economic conditions. Moving here into volume, volume's doing just fine, but it does show pretty much a downward slope in that volume, and that perhaps is not good on the way up. On the way down it's better, but we're just beginning the way down. So I would say just keep your eye on volume. Here into the MAC, definitely a longer term bottoming and basing. This bottom here is slightly above this level here, which is good, and this level here is also slightly above this level here, which shows that there is momentum and strength gaining. But we have to wait and see what happens here if the fast line does move back down and below that slow line. Perhaps we'll get another bottoming and basing, that perhaps in this area that would show continued improvement. That's what we're looking for, but we're still below that zero line, so there still is weakness. Moving here into the histogram, you can definitely see we have this top, looks like it's starting to roll over, not unlike this one here. So let's just watch and wait. I think the probabilities are that we'll continue to contract, head on down a little bit. I'm not looking for a crash, just for another consolidation. Price rate of change hasn't really done too much, pretty much within this channel for the last couple of months. We need to break out and above that zero line. Moving down here into the relative strength, much the same. You can see that we're near that 50 or midline. We're heading on down, but I think we need to reflect back up and start heading to that 80 level or that overbought territory. Moving here into stochastics, also looks pretty good. A little bit of a basing and bottoming here longer term, but again, such as we saw here, it rolled over. Perhaps just the early stages of a rolling over. We'll have to watch that. Not quite yet. Moving into the Williams does say initially indicate it wants to head down just like it did here. So let's see what happens. I think there perhaps is a bit of a mix being shown by the oscillators, but the majority of them indicate, I think, that the probability is that the market will head down here at least for the next few weeks or so. I'll look back up here at the price chart and look for that reflection at this top here. It looks like we're coming on down, so we want to see where that comes down and where it bottoms and bases. And so for today, that's ChewDog Charts. Thank you.